Hello, you're watching Smart Money, and good to have Charles Savage, CEO and founder of EasyEquities, with us again today to touch base and evaluate where things are at with the business right now. Charles, thanks so much for joining us today. Things seemingly still looking good. According to the 2025 South African Investor and Banking Report, EasyEquities still the dominant online share trading platform in South Africa. How much attention do you pay to this kind of recognition?
Look, it always feels good, to be top of the pops, if you like, or top of the pile. But really, for me, it's the sentiment around our customers and consumers and the growth of the base are much more important to me. But it's nice to win awards. It's nice to be top of the pile. South Africa is a very, very competitive landscape. It's our capital markets are as good as anywhere else in the world, and so it feels really good to be number one.
Yeah. You talk about building that customer base. You talk about it being a competitive market out there. What would you say is working to maintain EasyEquities' competitive advantage, setting it apart from other online trading platforms in South Africa right now?
I think it's our extreme attention to making investing easy for everyone. I think for the large part, people forget that for most of us, investing is an intimidating experience, and regardless of your economic background or demographic background, or level of education, that first investment is an intimidating experience, and we all kind of feel like 12-year-olds at the start of the journey. And I think that's really what has unlocked our opportunity, is that we've stayed true to the brand and constantly tried to make investing easier for everyone, regardless of the asset class. So whether that's crypto, whether that's property, whether that's equities or unit trusts, we put an extraordinary amount of education and attention to ensure that the first-time investor feels welcome and not intimidated.
Look, in its first decade, EasyEquities helped increase retail investor participation by 400% in South Africa. An element of that, of course, low base effect coming into play there. But talk us through how you've started to see the benefit of building this more inclusive economy and how that's coming through. I mean, I saw a post just the other day about a 10-year-old's portfolio hitting the 100,000 Rand mark. And that, I guess, a prime example.
Yeah, it's, that million number can't be underestimated. It's, and even though I agree with you that it's off a low base, but if you look at the globe, there are lots of countries that have been unable to move from a very low base to something like we have in South Africa. But what it sets is, if you think about what that million does, is you've now got a million investment warriors, if you like, out there spreading the word. Whereas, a decade ago, all you had was 250,000. That means that there are a million conversations happening weekly, monthly, or whenever in social environments. And your exact example, the example of a 10-year-old, having 100,000 Rand to invest, is those kind of discussions, those stories are very relatable. And if millions of customers are having those stories, then it becomes a marketing force, a snowball rolling down hill for you. And so I think the entire industry is going to benefit from this. Every sector of the financial services industry is going to benefit from the proposition of a million investors out there talking about their journey.
Yeah, absolutely. And you alluded to it, right? Across your portfolio of offerings, you've got South Africans able to invest in a wide range of investment vehicles. We're looking at shares, property, FX, crypto, unit trusts as well. Where are you seeing the most interest from investors at the moment? And why do you think that's the case?
Yeah, South African equities still rank number one on our customers' radar. The fastest growing segment, though, is crypto. So crypto has kind of got double-digit growth in terms of user engagement and usage. But that's off a low base. The average investor has never, 5 years ago, would never have invested in crypto. The third biggest area is US shares. For me, US shares present the greatest and most diverse investment opportunity. And as a proud South African, I love investing here at home. But we've got 300 investable opportunities on the JSE, and the US has got 15,000 investable opportunities, and it's a world of opportunities. So South Africa remains number one, which feels great as a South African that we've created so much local benefit, so much local investment from retail investors. But the fastest growing segments, crypto and US shares.
Yeah. So if an investor came to you tomorrow and wanted to begin their share trading journey, what would be the first piece of advice you'd give them?
Yeah, and this piece of advice I think is not well taken. The best thing that government's given us in an investment sense over the last decade is tax-free savings account. It's a low-cost vehicle to a zero tax regime. And it's an extraordinary product. 36,000 Rand you can put in a year until you reach a total max of 500,000. And then for the lifetime of that product, it's tax-free. And if you start young with it, and that example that we've just talked about, that was a tax-free savings account. If you start when your kids are naught and swap some extravagant birthdays for some tax-free savings account, build up and give your 18-year-old a fully funded tax-free savings account, that's the greatest gift that you can give anyone, because that'll be enough to give them a safe retirement. And so for me, start with a tax-free savings account, and until that, work as hard as you can to pull that up. And then once that's filled up, you can consider the rest of the world of opportunities.
Yeah. But that's a key example then of how policy and regulation can support building this inclusive economy as well, Charles. So if you had, the power, how would you change South African laws and regulations to improve the share trading industry in South Africa?
Yeah, that's a great question. I think, I don't think we have to do anything new. We just need to look at what's worked elsewhere in the world. And, one of the best savings markets and investment markets in the world is Australia. So they have one of the highest participation rates, and the structure that leads that participation rate it's the equivalent of our RA. It's called a super. They call them a super fund or a super account. But the difference is that in our RAs or retirement products, that we have a lot of rules and a lot of complexity around what you can invest in. It's almost like they're treating us like kids, like we're playing in a nursery school. And so they're trying to say, well, you can only invest in these things. In Australia, you can buy anything, but you have to invest a minimum of 10% of your salary every single month. And the wealth that's created in Australia is extraordinary. I mean, they have gone from outside the top 10 richest nations over the last 3 decades to the second richest nation in the world per capita. And the super accounts are a fundamental part of that. And you can own your house in your super, you can own crypto in your super, you can own shares, unit trusts, and all those kind of things. So my wish is that government stops treating our savers or investors like nursery school kids, mandated that we have to invest 10%, a minimum of 10% per month in those structures, but allow us to invest in whatever we think suits us.
Yeah, there's power in opening up access. When it comes to widening the pool of options, Charles, are there any investment vehicles you're tracking at the moment because you see potential for them to be added to the EasyEquities platform in the future?
I think the key theme is crypto. We're going to see it's becoming more mainstream in the US. It's been the first listed ETFs this year, and they're the fastest growing ETFs ever in the history of listing ETFs. That theme is going to play out across the world, and I can't wait for it to play out here at home in South Africa. I can't wait for us to list our first crypto ETFs. And then I think the crypto theme is going to be one that's going to drive the tokenization of assets across all asset classes. And fundamentally, what does that mean? It just means that we're going to make the ability to own an asset much easier than it was before. Tokenization, as the name kind of suggests, it breaks an asset down into smaller parts and allows you to own a small part of anything. So I think that the big investment theme for the next decade to perhaps even 3 decades is crypto and the tokenization, if you like, digitization of all asset classes, which then allow all of us to participate, whether that's buying into a company or buying into a fund or buying parts of an artwork or a racehorse, and everything in between.
Yeah. Earlier on, you touched on the interest being shown toward, U.S. markets. There are some limitations on the EasyEquities platform regarding smaller cap U.S. stocks. Are there plans to expand the range of offshore listed small cap equities in any way?
Yeah, I mean, we started, I'm trying to think the year we launched US, I think it was 2017. So it's been about 7 years now. And we started with about 500 stocks. We've got over 1,000 or 2,000 stocks now. We will continue to expand it, but it really is on user demand. So it costs us to list a stock. And so if there's no user demand, that's just a cost that somebody has to bear. But we do expand. We're probably adding 10 to 20 US stocks a month, so 200 to 300 a year. That is, it's 100% driven by user demand. And it's not that we exclude small caps. There are actually some large caps that we don't have as well. It's really about what our customers want to invest in. And if there's demand, we'll put it on the platform.
Yeah. Does that extend through to, EasyEquities and its offering to business and partnership accounts as well? Because that only includes local securities. And, one of the questions out there is, are there prospects to expand the offering to offshore securities in that instance as well?
Yeah, there are. Those are legislative issues around opening accounts, foreign accounts in the US. The legislation around owning shares in the US is very, very tough. It's very draconian. It's appropriate though. So, and so unless that legislation becomes much lighter and much easier, we're not going to enable it. But corporates can own shares on the US through us. So you can own a trust, a corporate structure, a trust, a PTY can own shares on the US. The regulatory reporting standards are just higher. And so there aren't any impediments from opening a corporate account. The process is not digitized though. So that's the key. So I think because people think that there's no digital process to support it, that they can't do it. They can do it, but it's a human-led physical process.
Okay. And as we wrap this conversation then up, Charles, hard to believe that we're into month 6 of 2025 already. What's your outlook for the remaining 6 months of this year, markets-wise and performance? Anything in particular that you're keeping an eye on?
Look, starting with South Africa, I think South Africa just continues to look better and better. I think the Reserve Bank is behind the curve on the interest rates. So, we've got an interest rate reduction. That's great for the consumer. That's definitely going to free up some liquidity. And I think a good portion of that liquidity is certainly going to come to the market. We've seen it in our business, is that with every loosening in the interest rate, there's a commensurate increase in the investments. And so that's good. That's going to be good for local equities. Our bond market's rallying, the rand's rallying, everything, South Africa really is looking good. And we're only a year into, the new political regime. So I'm very positive for the outlook in South Africa for the next 12 months. Decreasing inflation, decreasing interest rates, and improving equity markets. Globally, the picture is mixed, and Trump is an anomaly. You can't predict what he's going to do. You just have to follow his Twitter handle or his X handle. And I think he's going to continue to shake things up. He's going to continue to rattle cages, which means he's going to create volatility. But the fundamental thing that I think he wants, that we all want as investors, is he wants markets up. And so he's using the market almost as a barometer for whether or not his campaigns, his policies are good or bad. And so you see him, he does something, the market collapses 10% and he unwinds it. And so fundamentally, I think we're going to see a high level of volatility, but US equities will post a good year and continue to post good years under Trump. But it's not going to be without uncertainty and volatility.
Yeah. Well, Charles, let's leave it there. Thanks so much for having joined us once again on Smart Money. Charles Savage is CEO and founder of EasyEquities.